We are going to talk about the related party disclosures under the Indian accounting standard AS24. Now, the modern era of 21st century is probably one of the greatest century, which I would like to say in terms of business and management. Sometimes the company might have parked their funds, the company might have invested some amount. Good morning and welcome to the session 4 in Unit 5 in IFRS, where we are going to talk about the related party disclosures under the Indian accounting standard AS24. So let's just go further and try to understand what is this method all about. Now, the Indian accounting standard 24 requires disclosures to be made by the parent entity regarding its transaction with associate, joint ventures, subsidiaries, collectively related as related party. Now, the modern era of 21st century is probably one of the greatest century, which I would like to say in terms of business and management, because we have seen n number of mergers, acquisitions, joint ventures, collaborations, and so on. The reason is that we all have understood technically and theoretically that no business can go ahead and exist as a separate island. So there has been a lot of joint ventures, takeovers, mergers happening so that we can join hands and do business better. In that context, the Indian Accounting Standard 24 plays a very, very vital role in terms of telling out to the public, disclosing each and every financial standard, each and every financial accounting methodology. So that is very, very important. That is quite an important factor in terms of understanding how it is working and where it is working. Now, let's try to understand this. When we are talking about the Indian Accounting Standard 24, that means the disclosures made by the parent entity. Now, for example, let's take the Tata Group itself. The Tata Group took a controlling stake in the Jaguar, that is another car unit, the Land Rover and the Jaguar in UK, so that they could get a strong foothold in the international market of automobiles. Now, definitely that venture will take some more time to fructify its results and come out in the best manner. But definitely that strategic partnership made Tata's presence even more stronger. Now, coming to the accounting standard part of the same thing. Now, for Tata, the Jaguar Land Rover group is their related party. It is a joint venture. It is an association which they have formed in terms of buying out, in terms of making up the automobile. So in that case, now what happens is that when the Tata Motors, that is the parent company which made an acquisition there, has to report the related party transactions of what they are doing with the group in UK. Similarly, when Tata Steel formed a JV in the European countries like that of Ireland, in that of UK, all these places are their related party transaction. Now, why these things are important for us? Because these things will help us to understand what is the movement, what is the activity altogether in terms of business, in terms of the entity movement. So this is why I would always say that it is important for all of us to understand what is happening in the transaction perspective altogether, because the company might have bought in a lot of shares, the company might have done some transaction related to some equity base, some debenture base, there might be a buy-in, buy-out that might have happened, there might be a situation where the company would have taken over a few operations. So whatever is the related transaction with respective to that organization, this accounting standard AS24 is going to display, it's going to present it to the shareholders as well as to the public. So the related party refers that the person is related to or responded to that particular entity, is reporting to that particular entity. Why do I say this word is reporting? to that particular entity, because when we talk about this reporting structure, the hierarchical factors altogether, there is some connection, there is some contractual agreement, there are some business transactions under which both the parties are related. Now, moving further, the objective of this particular standard, that entity's financial statement, profit or loss, can be affected by the transactions with the related party transactions and disclosures, outstanding balances, including commitments to such parties. Now, this is going to be quite interesting for us to know. Now, when you are making a transaction with the related party member, now that related party member is none other than your JV, your collaborator, or any other person for that matter who is related to the business transaction altogether. So what is going to happen is that if there is going to be a loss because of this JV, or there is going to be a sudden gain because of the JV, now we need to report it to the shareholders in order to make them understand what is the situation, how are the balances moving up and down, what are the factors in terms of acquisition, capital asset, and other factors. This is why I would always say that the profit and loss statement of the individual balance sheets of the individual companies will not be able to tell us an overall picture. But when we talk about the AS24, this goes ahead and explores what is the connection between two factors or two entities who are related to a common business. Now, if you take the TVS group itself, there are several sub-companies under the TVS group which are into accessories, which are into electronics, which is into finance business, which is into automotive. And when you start looking into a company which is diversified well within itself, there would be a lot of transactions which will have a deep impact towards the balance sheet. Sometimes the company might have parked their funds, the company might have invested some amount, they might be waiting for that return. Sometimes just by the acquisition of the company, there might be a sudden hike in profit. Sometimes it is also possible that that particular unit is not working, but overall the company is doing good. So when I'm trying to put all the possible situations before you, it is trying to make us understand on the factor or on the segment altogether, what could be the impact as we are talking about. The impact is quite, it is quite upstanding to know about this factor, because there might be a lot of impact coming in terms of how the business works, what are the business factors, why the business looks into in that manner. All these things are quite interesting to know from a business standpoint. Now, moving further, the scope of this standard is identifying related party and transactions within them. So first we have to understand who are that related members and what is the transaction that they have in common. Now, for example, the business interest and the financial interest are two different things. So let us just get that part very, very clear. Now, for example, a company might have an interest of starting an educational institution or doing some CSR activity altogether. But that is also needs to be noted, because that's also going to have a financial impact, no doubt about it. But then when I'm talking about this related factor here, I'm going to say that, is it the business? Whom are we trying to talk? Whom are we trying to relate altogether? The company's interests are entirely different. And when we are talking about the related parties, that transaction is different. Related parties are those people who are directly involved in the business, directly involved in the line of action. So that is why this is very, very important for each one of us to understand. Moving further, identifying outstanding balance commitments and reporting entity and related parties. This is very, very important for us. Why? Because now let's say that there's an outstanding balance. We have got some money to be paid. We have got some money to be owned, that is owned by some creditors or some people who are there in the market. So we have some commitment towards them. We have some reporting structure that needs to be given. So this is where, the reporting entity and the related parties have to tell to the public. Most of the time, the public remains in the dark, or the public is not unaware about the internal transaction. Now, that JV that we have formed, one of the parties might have borrowed money, or we might have been owning money to somebody outside the market. Now, if that is not being bought out on the balance sheet, that is not being told as a part of the financial implication, people might think that this company is debt-free, so it's very good to invest. But later, when you come to know about the situation that the company also owns funds to several people in the market, automatically there will be a shake in the markets. That will be a complete pull down that happens in the share value. So that is why let the company be transparent enough in going and telling what are all the financial transactions that they have with the related party and what it owes in the market. Similarly, recognizing the circumstances in which disclosures will be required in the above stated situations. So many a times what happens is that company might feel this is not the right time for us to disclose. Anyway, people know me, I have a brand value, I have an identity, things are there, they will come to know. But then the disclosure factor is something that SEBI or any other governmental institution is behind you, because they want to understand this factor clearly at any given point of time. You will not be able to take things at your stride, at your stand altogether. You have to go further, recognize this situation and tell to people very, very clearly that yes, this is what we have been able to do. This is why we are doing this particular business, and this is where we are involved as a team, involved as a group function altogether. So that's why I would always say this factor, that whatever might be the situation, whatever might be the stand that you are taking, this has to be understood, this has to be recognized at any given point of time. Followed by determine the disclosures to be made. What are the factors that we have to disclose? Now, disclosure doesn't mean that just going and showing up the entire balance sheet or saying that I am transparent. But when I say disclosure, it is the concerned transactions that the public must know, as well as the regulatory authorities who are interested in you. So it is a mandatory clause here that you understand, first of all, what is happening, why is it happening, and what are the segments that have to be disclosed. Based on that, the disclosure can be made. Now, why should be the related party transaction disclosed? It's a very, very important question that most of the people ask. Now, the related party transaction are an integral part of the business in today's world. So point number one, yes, they are vitally connected. They are a very, very important factor for us. The transactions between related parties are generally conducted at negotiated terms, and hence they must be disclosed. They must be disclosed because they are done at a negotiated terms. That is very, very important for us, because we negotiate. As a company, there will be a lot of negotiations in terms of when you're going for a buy-off or when you're going for a sell-off or a spin-off kind of thing. There will be negotiations. It might not be done at the fair value or at the market value. There might be a lot of terms and conditions under which the JV might have been formed or the agreement would have been signed. So we really do not know as in what is happening in terms of the business. So that is why it is advisable that we go ahead, we understand the terminologies very, very clearly, and based on that, we will be able to go further of the transaction. Additionally, for an investor, knowledge of related party facilitates more informed decision. Reliance, when they made an acquisition in terms of coming forward for the telecom, or in terms of retail, or in terms of the technology matters, or probably even when Reliance made its acquisition when they wanted to come in full-fledged in terms of lifestyle and fashion, the investors were very clearly made aware about the factor that Reliance is going to diversify themselves not just into petroleum related but also into FMCG and various other factors. Now that is a very, very good acquisition. That is a very, very good movement, I would like to say, in terms of the market. Why? Because the investor, when he comes to know about the factor that the company is diversifying itself, itself and trying to invest in the sunrise sectors altogether, then that means there is a possibility for that share value to go up. So that's why for the investor, it is always good that he comes to know about what are the related party transaction, what is the new acquisition, what are the new models the company has followed. Disclosures to be made. Relationships between the parent and subsidiaries should be disclosed irrespective of whether they have been any transactions or not, followed by if there is any entity's parent or ultimate controlling party which comes into picture, consolidated financial statements, and the next senior parent must be named in the consolidated financial statement. So when I talk about this factor, it's quite interesting for all of us to know here that the relationship between subsidiary and the parent should be properly disclosed, enough saying that who is the person, who are the concerned parties, where is the relationship, in what levels it is being done, where is the entity reporting, who are the people who are behind it, the responsibility of owning the membership. All those things have to be disclosed for the public use, and the entity must report the compensation to the key management personnel that has been taken from each category. It's one of the most interesting and rather the challenging part, I would like to say, as per the accounting standards 24. Let me take the example of Infosys here. When the former CEO of Infosys, Mr. Vishal Sikka, was being questioned in terms of the high compensation that was being paid to him by the board members itself, that raised and stirred a controversy altogether in the management and board, saying that why certain people who are in the key position of Infosys were paid such high salaries. Now again, the question is quite simple in terms of asking it, but then it's very, very difficult in terms of answering. Why? Because it depends upon the nature of the company and the way they have hired people, the way they have taken a particular person, depending on his entire, experience, capability and delivery and performance altogether. Even recently, when Mr. Salil Parekh had taken over the CEO of Infosys, and the company had gone ahead and disclosed, stating what is the salary of the CEO which is being paid, the perks, compensation, including the board members altogether. So what we are trying to understand here is that the accounting standard tells very clearly in terms of who are all the key management persons who are taken in and who are going to be paid, what is that they're going to be paid, are they going to be given any joint stock options, employee stock options, or any other perks, incentives. Everything needs to be known to the public so that they will come to know what is happening in terms of the transactional values. Now, if the key management services are being obtained from another entity, then only the amounts incurred in such thing can be just, suppose it's been taken on a consulting, it's just been observed, then you just have to give them what is the disclosure value in terms of the money that is being entitled in the business. Now, if the entity has transaction with the party during the financial year, it shall disclose such transaction, amount outstanding, the balances, what are all the factors. So, for example, in that particular year, the entity had a transaction, or let's say it had a transaction in terms of with the group, saying that they had bought it out, or there was some outstanding factors here. All those things have to be told very, very clearly. So without all those factors, you will not be able to understand the movement of the financial value that has been told or that has been disclosed altogether. Now, the above disclosures have to be made separately with regards to the parent, the subsidiaries, the associate, entities with the joint control, significant influence, joint venture, whoever is the person. So what I'm trying to put here is that every single enclosure, that is whatever with the VCs, the people who are involved in that, the key management personnel, the parent company, the takeover, every single individual document has to be presented in terms of the financial value. Then only it will be made as transparent transparent as possible, and the decisions taken can also stand long. Now, the transaction with the government-related entity. Now, there are many companies who work for the government in terms of project, in terms of infrastructural lease, in terms of infrastructure manner. So, anything that has a significant influence over the other entity-related party, especially from government. Now, when you're talking about the metro project, or when you're talking about a highway project, an infrastructure project, a road corridor project, there are multiple people who are employed by the government, who are engaged with the government in terms of doing out that particular project. So if your company has got government related projects like IVRCL or the Nagarjuna construction companies, Dilip Buildcon, Larsen and Toubro, GMR, all these kind of companies have got several government related projects which comes into picture, even Lanco Infratech. Now all these kind of companies are involved in terms of government related transaction. So it is mandatory for them to go further and release all the documents related to that particular transaction. With this, I come to the end of this particular session. I hope and believe that this session was of a great value and of resource to you. In the upcoming sessions, we shall be studying more about the different standards in the IFRS, that is the International Financial Reporting Standards, and its impact towards the Indian accounting world. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.